On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. Morning team, hope everyone is well. Let's take a look back at last week, then let's turn our attention to what's coming up in the days ahead. Last week was a very strong one for global share markets. We saw that 90-day trade truce between the US and China set the tone early on. If you want to know more about that announcement, what the details look like, what it means for markets, what investors should do, I did record an episode early last week on that very topic, so go back and take a listen to that one. But we ended the week in very strong shape in terms of returns. The S&P 500 index in the US surged 5.3%, so a big rally. That saw it storm back into positive territory for 2025, and it is now just 3% below the record high that we saw from February. Remember, it was just a matter of weeks ago that the US market was down almost 19% from that February peak. Now it's down just 3%, and it's actually up year to date, so a pretty amazing turnaround. Other markets also followed suit. We saw strong gains across the board. The local NZX 50 here in New Zealand had another good week. It posted its third consecutive weekly gain. It was up 1.4% for the week, and that sees it up 7.4% in the month of May, and that puts it on track for its best monthly gain in 5 years. So it's been a great performance across the board over the last few weeks. Interest rates rose on the back of that more positive tone, a little bit more optimism out there. The US 10-year Treasury yield finished the week at just under 4.5%, and here in New Zealand, the 5-year swap rate was 11 basis points higher at 3.58%. Right, let's look back at some of the key releases last week, and we did get some fresh inflation figures out of the US. We got the April Consumer Price Index, the CPI, and good news, it was a little lower than expected. We saw the monthly CPI in April come in at 0.2%, but expectations were for 0.3, so it was a little bit below that. On an annual basis, tracking at 2.3%, which is again a touch below expectations, and at 2.3%, that's the lowest we've seen since February 2021. The US has made some great progress on inflation, which did hit 9.1% at one point in 2022. That's the highest we'd seen since the early 1980s. Now it's right back at 2.3%. There was limited reaction to this news. You've had developments on the trade and tariff front that have overshadowed some of these good inflation releases because people are still looking ahead and wondering if we will see some upward pressure on inflation as the tariffs make their presence felt. But later in the week, we got the PPI. That's different from the CPI. The PPI is the Producer Price Index, so it's sort of wholesale prices. That got a little bit more attention later last week, and it unexpectedly fell 0.5% during the month of April, in contrast to expectations for an increase of 0.3%. So that was below expectations too, and by a bigger margin, and that did seem to get the market's attention. So good news last week on the inflation front in terms of what that means for US interest rates and the Federal Reserve. Markets still see the 2 rate cuts from the Fed this year, and the next move is expected to be in September. So the Fed is on hold at the moment, taking its time. Markets expect that to be the case for a few more months. The Fed will want to see the impact of tariffs on inflation, on prices, on confidence, and on activity. The next move is still expected to be down, but we're not expected or likely to get that until the third quarter. So watch this space. Here in New Zealand, we've got a housing market update from the Real Estate Institute. The residential property market still looks quite subdued, and in April we saw mixed prices. You've still got cautious buyers, you've still got a high number of listings. In terms of volumes, they were down quite a bit compared to March, but they were higher compared to the same month a year ago. So, sort of take your pick about which of those you want to focus on. The days to sell sitting at 40 in Auckland, 42 elsewhere, so kind of middle of the road. In terms of prices, like I said, a bit of a mixed bag. National prices, in terms of the house price index, down 0.3% for the month. However, Auckland fell 1%, and that did drag things lower. It wasn't quite as bad elsewhere, and you did actually see the odd gain. National values are up 3.3% from the May 2023 trough. That was sort of the low after that fall that we saw post-COVID, but they're still 15.4% below the peak that we saw in 2021. So affordability is still not fantastic in terms of our housing market. Yes, prices did fall after that 2021 peak, but remember they did rocket ahead through 2020 and through most of 2021. So while they've fallen from those absolute highs, they're still 20, 25 odd percent above pre-COVID levels. So I'm optimistic about where the housing market goes for the balance of this year and into next year. I just think you need to be realistic about any gains that you might expect. The long-term average is about 5.5 to 6% per annum. I think that is something that investors should be banking on rather than being too hopeful about seeing double-digit gains or anything like that. So that was the housing market, and that was really the roundup of most of last week's key releases. Turning to the week ahead, and at a global level, investors will be watching the global flash PMIs on Thursday. These should offer further evidence of how trade policy and uncertainty is impacting activity in some of the key regions. We'll get the first one out on Thursday at 11 o'clock, I think it is. That will be Australia. Japan follows, I think, 12:30 on Thursday, and then you'll get the same figures or the corresponding figures from the UK, Europe, and the United States on Thursday evening and into the early hours of Friday morning in the case of the US. And flash PMIs are essentially activity indicators. They've been holding up pretty well over the last several months, but we have seen a bit of a tapering off in confidence and expectations. So it'll be interesting to just get a pulse check on how the global economy is tracking. On Monday, we'll also get Chinese activity indicators. These are out, I think, at 3 o'clock. So retail sales, fixed asset investment, unemployment, I think, is in there, industrial production. These will be fascinating because they should account for the impact of the tariffs before last week's pause. So it'd be really interesting to see if the Chinese economy has been impacted in a big way, because these will cover the period just before that pause, before that trade truce, but after that escalation where the tariffs went up to 100% plus. So that'll be Monday afternoon. In terms of central banks, the highlight will be the Reserve Bank of Australia across the Tasman, which is expected to cut interest rates on Tuesday afternoon. The announcement, I think, is at 4:30. The cash rate sitting at 4.1%. I think it's been cut once. That cut came in February. Then the RBA chose to sit tight in April. They're expected to cut it again this week. That would take it to 3.85%. So higher than our OCR here in New Zealand, but inflation has been a little bit more problematic across the Tasman. It's starting to come down now, but it has been a little bit more persistent. So that's on Tuesday afternoon. That's expected to be the central banking highlight. Also out there in the world, we've got the EU-UK summit that will take place on Monday in London. You've got a meeting of the G7 finance ministers and central bankers. That takes place in Canada, I think, from Tuesday through to Thursday. And the EU's foreign and defence ministers will also meet in Brussels this week. So a few things to watch on the political front. Here in New Zealand, quite a busy week. We will have some more dairy auction news. Wednesday morning, we'll get the latest dairy auction figures. The sector is looking in very good shape and looking ahead to a new season that should be pretty solid if it's anything like the season that's just about to finish. A fortnight ago, the GDT index was up 4.6% at that auction, and that was the strongest we'd seen in 6 months. It was the third consecutive gain prices are now up 10% this year, back at levels we haven't seen since the middle of 2022, and we're headed for confirmation of a $10 payout and an opening forecast for the 2025-2026 season that is probably about the $10 level too. So the dairy sector is in very good heart. Also this week here in New Zealand, we've got the announcement of Budget 2025 on Thursday afternoon. I think it gets released at about 2 o'clock in the afternoon. That's how it was in the old days. I don't think they've revised that time at all. Not expecting it to be fantastic. I think it will be somewhat of a sombre affair. The economy has been in a difficult spot. That really does limit the tax take. It means government revenues aren't quite as high as the government would like them to be. And we've still got a fairly high level of spending in place, which is largely due to that fiscal expansion that we saw from the previous government. So I think this current government will still be looking for more cost savings. They'll be trying to reprioritise things, but there's still a lot of infrastructure that needs attention, so it will be a difficult balancing act. Those reprioritisations will be a key funding source, I suspect, for new initiatives. Surpluses, probably still a few years away. Forecast debt levels, probably likely to be higher than we would like, higher than what was forecast at the last update back in December, because we haven't had that strong tax take and the costs are still higher than we would like. So I don't know if there'll be a lot of good news in this budget, to be honest. Markets will also be looking for some guidance on the bond issuance program over the forecast horizon, and wouldn't be surprised if you see an increase there. Also plenty going on locally on the corporate front. The reporting season in May really gathers a bit of pace this week. The heavyweights are all next week, I think. Fisher & Paykel Healthcare, Mainfreight and Ryman. But still a few things to watch this week. Gentrack, Serco, Tower, Napier Port, Oceania Health, a couple of AGMs too from the likes of Vista Group. So it will be a very interesting period. I think investors will be keen to hear what some of these businesses see ahead as they navigate this period of more uncertainty with tariffs and so forth. There'll only be so much they can say. I think a lot of companies will play their cards relatively close to their chest. Internationally, you've seen a lot of companies actually pull their guidance or pause their guidance because they're just not sure how things will play out. So you might see a bit of that uncertainty creep into our outlook statements, but hopefully it does just give us a read on how the economy's tracking, and hopefully you do see some good results from some of these important businesses. Across the Tasman, there's also a few companies reporting, James Hardie of note, and internationally, most of the companies have already reported now, most of the big US and international companies, but we've got Home Depot on Tuesday, Palo Alto Networks also on Tuesday, Lowe's, Medtronic, Target, Intuit, some of the other international companies that are also reporting results over the balance of this week. So there you have it. Enjoy your week, team. Thanks for listening, and we'll talk again soon.
For more insights, visit craigsip.com.